Have you ever thought about investing in real estate but don't know where to start? Well, you're not alone. Real estate investment can seem like a daunting endeavor filled with jargon and complex numbers, but don't let that deter you. Investing in real estate can be a rewarding venture, offering potential benefits like cash flow, appreciation, and tax advantages. Delving into real estate can also provide a hedge against inflation, as property values and rental income tend to increase over time. Plus, it's tangible. Unlike stocks or bonds, you can touch it, see it, and make improvements to increase its value. But how do you get started? What strategies can you employ to navigate this fascinating field successfully? There's no need to fret, we're here to help. In this video, we're going to demystify real estate investment and lay out some easy-to-understand strategies for you. So sit back, relax, and let's embark on this journey to financial freedom together. Before diving into strategies, it's crucial to understand what real estate investment is and why it's a viable option for many. Real estate investment is the process of purchasing properties with the intention of generating income. This income can come from rental earnings, profits from property sales, or both. Investing in real estate is a powerful way to create wealth, and it's been a proven method for many of the world's wealthiest individuals. Now, why do people invest in real estate? Well, there are several compelling reasons. For one, real estate is a tangible asset. Unlike stocks or bonds, you can touch it, see it, and utilize it. This tangibility provides a sense of security that other forms of investment may lack. Moreover, real estate can provide a steady stream of income, especially from rental properties. This can be a significant advantage for those seeking a consistent return on their investment. Another key aspect is the potential for capital appreciation. Over time, the value of real estate tends to increase, allowing investors to sell properties for more than what they initially paid. Lastly, real estate plays a crucial role in portfolio diversification. By investing in real estate, you can spread your risk across different types of investments, thereby potentially reducing losses if one investment performs poorly. So what are the basic types of real estate investments? There are four main types. First, there's residential real estate, which includes homes, apartments, townhouses, and vacation properties. These properties can be rented out to individuals or families. Next, we have commercial real estate. This encompasses office buildings, retail spaces, and other business properties. These are usually leased out to businesses. Then there's industrial real estate, which covers warehouses, factories, and distribution centers. These properties are typically used for manufacturing or storage. Lastly, we have raw land. This includes undeveloped land, farms, and ranches. Investors can make money from raw land by developing it or selling it to someone who will. Now that we have a basic understanding of real estate investment, let's move on to the strategies. The first strategy we'll explore is the buy and hold strategy. This is an approach where you purchase a property and hold on to it for an extended period, allowing its value to appreciate over time. It's like planting a seed and patiently waiting for it to grow into a sturdy tree. The buy and hold strategy is all about playing the long game. It's for those who understand that Rome wasn't built in a day and that true wealth is often the result of years, even decades of smart, consistent investing. This strategy hinges on the fundamental principle that property values in general increase over time. And while the market may have its ups and downs, the overall trajectory is upward. One of the most attractive aspects of the buy and hold strategy is the potential for passive income through rental properties. Imagine owning a piece of real estate that not only appreciates in value over time, but also puts money in your pocket every month. It's like having a business that runs itself. You just sit back, relax, and watch your bank account grow. But remember, it's not all sunshine and rainbows. The buy and hold strategy requires patience, discipline, and the willingness to ride out the occasional storm. However, for those who can weather these storms, the rewards can be substantial. The buy and hold strategy can be a powerful tool for building wealth over time. It's not a get-rich-quick scheme, but a tried and tested method to steadily grow your wealth. Another popular strategy is house flipping. Now, what is house flipping, you may wonder? Simply put, it's the process of buying properties at a low cost, typically distressed or outdated homes, then renovating and selling them for a profit. It's like the extreme makeover of the real estate world. Imagine this. You find a house in a prime neighborhood that's seen better days. You purchase it at a bargain, then roll up your sleeves and get to work. Maybe you're knocking down walls for an open concept living room, or perhaps you're updating that avocado green bathroom to a more modern aesthetic. The goal is to enhance the property's appeal and boost its market value. But here's the catch. House flipping isn't just about wielding a sledgehammer with gusto. It demands a keen understanding of the real estate market. You need to know when and where to buy, and for how much. You also need to have a solid grasp on renovation costs to ensure your expenses don't eat up your profits. Moreover, house flipping requires a certain set of skills, or at least the ability to hire the right people. Whether it's dealing with contractors, understanding building codes, or having a knack for interior design, successful flippers often wear many hats. So, as you can see, house flipping can be profitable, but it requires a good deal of work and market savvy. For those who prefer not to deal directly with properties, there's an option called Real Estate Investment Trusts, or REITs. So, what exactly are REITs? Think of them as mutual funds for real estate. These trusts are companies that own, operate, or finance income-generating real estate. They were designed to make it easier for everyday investors to put their money into real estate without the hassle of buying, managing, or financing properties themselves. Now, how does this work? Well, REITs make profits from the rents they collect on their properties. These profits are then distributed to shareholders in the form of dividends. It's a straightforward way to earn passive income, and it can be particularly attractive for those seeking a regular income stream. But like all investments, REITs come with their own set of risks. The real estate market can be volatile, and the performance of REITs is directly tied to this market. So if property values go down, so does the value of your REITs. Also, not all REITs are created equal. Some invest in specific types of properties like commercial buildings or residential complexes, so it's important to do your research and choose wisely. Another thing to keep in mind is that while REITs can provide a steady income stream, they may not offer the same potential for capital appreciation as direct property ownership. Investing in REITs can be an excellent way to get exposure to real estate without the need for direct property management. So, we've covered some basic strategies for real estate investment. We started with an introduction to real estate investing, where we learned about the potential of this exciting asset class. We talked about how it's not just about buying property and selling it for a profit, but also about creating cash flow, leveraging tax benefits, and building long-term wealth. Next, we dove into the nitty-gritty of understanding real estate investment. We learned that it's about more than just buying a property. It's about understanding the market, knowing the trends, and making informed decisions based on solid research and analysis. We then explored the buy and hold strategy, a classic approach to real estate investing where you purchase a property and hold on to it for a long period of time. This strategy is all about playing the long game, with the potential for steady rental income and appreciation in property value over time. Then we flipped the script and looked at the house flipping strategy. This approach is all about buying low, renovating or improving the property, and selling high. It's a more active and hands-on strategy that can yield significant returns if done correctly. Finally, we took a peek into the world of real estate investment trusts, or REITs. These are companies that own, operate, or finance income-producing real estate, and they offer a way for individuals to invest in this asset class without having to buy or manage properties themselves. But remember, each of these strategies carries its own set of pros and cons, and what works for one person may not work for another. It's important to consider your own financial goals, risk tolerance, and time commitment when choosing a strategy. And of course, this is just the tip of the iceberg. There's so much more to learn about real estate investing, from understanding different property types and markets to mastering the art of negotiation and deal-making. So don't stop here. Continue to educate yourself, seek advice from experienced investors, and always keep an eye on the market. Remember, the key to successful investing is knowledge, patience, and strategy. Happy investing.